Now we're going to talk more about the bearish engulfing candle on the S&P 500 and NASDAQ and the subsequent recovery as we get into the charts. But I want to lead with a review of a few historical comparisons and stats to give us a sense of where we sit in the cycle. The TLDR is that if you're in longer term positions, there's really nothing to worry about. Even with this little correction we're seeing now, there is a general bullish outlook. However, if you are in swing trades or leverage positions, you may want to be a little bit nimble over the next few weeks, as October can be choppy, but the general trajectory for Q4 is positive. Now, historically, October 20th through 27th are the worst times in the market generally of any Q4, and this is where we normally set our low for the quarter. This time, however, it looks like we might be pushing that correction forward, coming a bit earlier than those historical norms. If we pivot over to this chart, you can see a numerical representation of returns, and that more challenging October is clearly contrast with the much more positive returns for the remainder of Q4. So if I had to summarize all that, the macro trends remain intact, and all signals still point to a positive post-rate cutting cycle trajectory, much like the one we have been discussing for weeks now. And I am actively out there looking for signals to the contrary that would tell us that we need to be a bit cautious, and I'll of course report on those if and when any meaningful signals come through, but I have just not found them yet. So don't be surprised if October volatility persists.